Good morning. Well, there's the measured move. It didn't go up. And typically when you get a buy setup like that, that fails, you get a measured move lower. There's a crazy, oh, geez. Mute this. I gotta mute YouTube there. So we talked about this early in the week and in the weekend letter. As convincing as this pattern was, and I did really like it, it just never triggered. This pullback, and this is one of my favorites, honestly, where you get a pullback like this and a little sideways move, and it breaks the lows and comes right back up like that. I don't know about it happening all the time, Mark, but it happens. You know, if it happened all the time, it wouldn't be any type of a shock pattern. But anyway, you know, it happens more often when you have a scenario like this, like I explained it in the letter, where you have time frames in opposition of each other, meaning you have the higher time frame, in this case, the weekly. It could be in an hour, an hourly, and a 5-minute if you're intraday trading, but you have a questionable, in this case, a weekly retesting and possibly an M top, and you got a buy setup. Now, a more obvious one is when you have a downtrend on the higher time frame and the lower time frame is pushing up and forms a buy setup. And that's a more obvious one in which the buy setup would fail. This one wasn't as probable, I would say, because the weekly was in an uptrend, and this could have been some type of continuation pattern, which often doesn't happen when it's close to a prior high like that. But, you know, in a market that is relatively strong, it can happen. So it wasn't so sure whether this could continue as a continuation pattern or it turned into the M top. Now, clearly, you know, 2020 hindsight, we've got the M top and the measured move. But the pattern here, and I mentioned this in the green room on Monday when this started to go down, when it got a little extended, and it seemed like, okay, maybe this could rally at some point. And I said, it's more unlikely that it does that because of the shock element of the daily time frame, where these buyers here, and no doubt, you know, this is a picture of buyers aggressively stepping up at the rising 50-period moving average and a little breakdown failure. And when that didn't continue higher, and then when it broke the low, Thursday's low, which I said, if it breaks that low, you know, look out below. And so now that it's down at the next support, obviously the futures are below here already. I suppose, you know, somewhere down here, this 3,300 level is where it's likely to go, that next level. And maybe that's where it begins to turn. So weekly shallow pullback gives better odds of an M top. Yeah, Tony. I mean, that's the definition of an M top, right? If you look in the MTS course or the swing course, it's defined as a momentum move, which you have right here, and then a shallow pullback, which is relatively close to the area where it pulled back from. The left side has some type of a potent reversal, typically, which this did, and then it retests it. And now, you know, it looks like it's heading down there. Well, 3,200, I don't think it's going to get to 3,200 today. That would be an amazing move, considering the width of this bar already and this low. But it could ultimately get down there, maybe by the time of election time. And so we'll just see how it plays out. But for a downside target, I would think this 3,300 level, just because of the length, the size of the bars here. So looking at a daily average range and comparing to prior ranges, and the idea of, well, you know, these are the biggest range bars, you know, recently. And if today is about that size, if it was to reach, say, that, you know, a range of about that, it would probably put it down here, and you look to the left and you see that there's those bottoming tails over there. And that just kind of leads you to a common sense analysis that that would likely be where prices would turn versus, it was just starting to move down. So we'll see. I mean, that's the level that I'll be looking at. We do have a wide range bar on the hourly time frame here, which is also suggestive that at least prices would consolidate at this point as if they're going down. A September low. Well, eventually. Well, that's the 3,200 area, right, Trader McGraw? That's the 3,200, maybe. I mean, look, once this weekly is in place and it's down there, sure, we're going to get a bounce, but at that point, let's say it begins to hold, and so let's just make that red. At that point, the best case scenario we're looking at going into next year is a wide trading range. So again, we'll see. We don't want to get too far ahead of ourselves. Right. So SPX today, looking at this low, let's see where SPX is, what that number is. And now we've got gaps and what have you. Down here, you've got an unfilled gap at 3,300. So with this gap down and whatever extension there could be, look at below 3,300. 3,290. There's nothing at 3,290. McGraw, you must be looking. I mean, I'll look intraday here. There's nothing at 3,290. You must have some fib lines or extension or some mystery lines or something like that. You're in the rabbit hole. So that unfilled gap and that swing low right there, and so 3,290 should be okay. By whatever to get the premium on ES. Oh. Well, that would be an overnight low. I wouldn't count on that in a situation like this, McGraw, for possibly, a trade, ES trade. But look, if it gets down here, that whole number, you're in that area, you can wait and look for sellers to blink, but a 5-minute reversal or whatever. But, the premiums are going to be big, and there's going to be buyers down there. Let's see what happens. We'll see when, at that moment in time. Okay. The call side probably, I'm guessing, not going to be possible. Unless you get really close to it, and then who knows how far it might rally. But just looking at the charts, I would say, okay, 3,400. That's, if it's down here at 3,300, unlikely you're going to find any premium at 3,400. I don't know where, with the void there, I don't know where to go with that. Well, let's see what it looks like down at the lows and what forms intraday on the 5-minute charts on the way down. Right, we got 3,390 premium, safe is better. If there's the premium down there, me, I'm scared of these things, so I'll get as far away as possible. All right, let's see the rest of these markets. This doesn't look so bad. That's pretty interesting. It's holding up there. So I guess the fangs are holding in there pretty good, but these, the Qs look like they were going to go it alone yesterday. They were going it alone, and then they wind up failing. So they're showing some relative strength, and so we always like to look at the different markets. And so yesterday's low, Obviously, there's going to be buyers there. Whether they can hold it, it'll be interesting to see. We'll watch that as it unfolds here this morning to see what the reaction is there. Maybe it saves the ES and SPX from going all the way down there. Let's see how things look. But obviously showing some relative strength to hold up there. Will it rally to yesterday's close and finish green? Ooh, oh, you mean the S&P? I wouldn't look. We've seen some crazy stuff in this market. I mean, I've made comments in the room that my thought is it would never get to a certain level intraday, and it did it, on the reversals. But now this failure pattern is a bigger pattern than those points in time when it was on the way up in the past. But well, we have to be open-minded and see. Likelihood of eventually going back to 3,000 SPX. Hey, look, 3,000. Biden for president. Nancy back in there again. Maybe lower. Who knows? Maybe lower. It'd be a disaster. So internals are almost there. Sentiment is still, and the only reason sentiment is getting to a bullish level is because of these bands. And look how narrow they've gotten because sentiment has been so high for so long that the bands have even narrowed to give us a bullish level. And I don't, I don't want to mistrust my own analysis here that's worked for a long time, but sentiment down here, not even to one yet, the uptrend's been broken. I'm doubting that this is far enough. Now I don't know where that put call ratio is going to be at the end of the day today, but you could see yesterday that, not yesterday, several days ago, it did spike over here. And so now this could historically a really low level. Let's assume this keeps going down is around 330 to 350. You're gonna be a buyer the next day or two. So we'll see. Dow is weaker. It looks like it's definitely got to go down here. And I would hope it just keeps falling down into there for an intraday trade. That should be good. And then, a little 5-minute bottoming action there to go long. We'll see how far it gets. Dane's asking, what platform are you buying your premiums? I use Interactive Brokers. Many people, Dan uses Thinkorswim. Pretty much any platform that, you can do a spread in, it's going to work. You can do a contingent order. All right, so big move and a vertical move to the downside. So down here, support, obviously, looking to the left. Big bar, wow. All right. The Russell, which was looking the best over here, obviously it doesn't, and there's really nothing to stop it. Scratch that up here. That's from the past. It's nothing at this point. Let's cut through that swing low. There is nothing there, folks. So maybe one of the other markets can save it at this point. Big top in place. It cut through here, cut through there, and there's nothing there. Bonds up as they should be. reached that downside target, which we've been talking about for well over a month, maybe two, but down there in reversal. I mean, it just reinforces the whole idea, which I've been saying, for over 20 years. Look to the left. Maybe it starts to sink in that it works. You don't need all the other squiggly lines. Someone's saying, hello, Greg, sub to your pristine newsletter. Back in the day when you could call in, futures looking here, no stimulus, doesn't look good for bulls. Well, I guess that's obvious what that has to do with pristine. Oh, maybe you've been around since the pristine newsletter. Was it a fax service back then? Calling in orders. Yeah, I used to call in orders. High tech had a speed dialer on my phone to call different offices. Anyway, oil, everything lined up here going in the right directions for the bearish view, but getting close to support. So unless you're already short, you're going to be late to the game. Not looking good for gold, and the theoretical of this being a breakdown failure, unless it gets turned around pretty quick, and there's no evidence of that. But now that the pivot low is formed there, that's getting close to support as well. Yeah, it's getting late here. Silver is going to be the same stuff, and transports, obviously, rounding top now in place rather than the consolidation to go higher. So, yeah, have it. All yours, Dan.
All right, thank you.
That looks good.
Yeah, folks, on IWM and Twilio, we have very light inventory. So actually in the weekly options trader, we have 3 bear call credit spreads: Twilio, TAN, IWM. Let's move stop on Twilio and IWM 30-minute high. And we gave Snow put spread. I got some emails that people didn't get filled. So yeah, let me switch the screen here. I was actually just talking as I was posting an update on Twilio. So if you did not get filled on Snow, obviously don't do it today with the market chaos here. But extremely light inventory. And as I just said, three shorts to 1 long. The swing ladder, we have Rio. I tighten the stop, 30-minute high. We have DHR. We sold a third at the high yesterday. I tightened the stop under this pivot right there. And we got CCL. We have a put spread that's gapping under the stop. So we're going to use the 30-minute low on that as always. Kerbal, and then the MSCI. And that's it. So we're extremely light, like a record light. Yeah, let's look at gappers here. Let's see, Alex talked about Lincoln GE. Got a ton of earnings in here again, so I'm gonna have to go a little bit fast. GE earnings gapping over yesterday's red bar, which is bullish, but I'm not rushing into any longs whatsoever with the pre-market being weak and still grinding lower pre-market. I would love a 30-minute washout, but we'll also be on the lookout for a breakdown snapback, which is a breakdown failure. But the more the rubber band gets stretched to the downside, the better. The more confident the turn is when we get the internals giving us a bullish extreme. AMD, Alex, I see absolutely nothing to do with that there. Jesus, Daku, gapping down 219. I see no pattern there. Jesus. SPG, the only reason it's not earnings, but I'm looking at this, there was a big article in the cover of the journal today that a tsunami of foreclosures are going to be coming, which we know about, both residential and commercial. People not paying their bills, and then the moratorium on residential stuff. So this is gapping to these prior lows, but that's a bearish weekly. Yeah, these REITs are having trouble for obvious reasons. ADP 156, a big bullish gap. Has room on the weekly, so let's keep an eye on that. 30-minute high. I'm going to put him right here. I don't need SAP anymore. ADP is holding very, very well. Look at Microsoft. So McGraw, remember Jake, last night when it was whipping around and you're like, oh, it's up on this. And I said, Jake, I said, this normal, don't read anything into it. There's a lot of digestion to go on. And now Microsoft's getting punished here. That's a big percent drop. Let me see what the expected move was. Absolutely, it could bet 2-1 without a doubt. It could. A Microsoft expected move by Friday. Wow, $9. 448. Wow, it did. I would not have expected a $9 move on that. Let's continue. BX had earnings, was up a little bit pre-market, but that was not on my bullish list. This is kind of a weird looking kind of head and shoulders, but you had the upside shakeout and then cracking the horizontal support right there. So that was a bearish setup on Blackstone. AUVI 1070, gapping way the heck up here. Now, hypothetically, if it were gapping right over this prior pivot, then that would be a tier 1 setup to buy a 5 or 10 minute high. But the gap's too big now. Fizzler 91, it's too big for me. To be a tier 1 right out of the gate. Could it just keep ripping and go up another $20? Of course it could. But when it's gapping, above my weekly chart where I can't even see it, that's too much for me. But yeah, it's a very bullish gap. Actually, we're short this TAN, T-A-N, the ETF solar, and I saw it up today, and now it's down, so that's good for us. Akamai down 101. This is a bearish crack. See, I need to look at my weekly to see if there was a price void over here, and there's not. See, 101 is to a wall of support, but hypothetically, if this were a big fluid move, then I would be interested in that. Yeah, Greg and I were looking at a couple charts last night. Look at XAR monthly. Monthly is a sell setup, breakdown. So we're going to be looking at the military sector to try to short some things on bounces with a big gap down today. Novice people are going to say, damn, where are my shorts? Where are my shorts trades? And this ain't the time to put on shorts. I mean, with a big gap down, we missed it. Vishy, if you can put your drop down, help panelists and attendees. He's asked me about Google. 1560. I have no idea what you want to do with that. I mean, it looks like it wants to head lower to the gap fill, 1560. Oh, that's right where it is, actually. Well, no, it could, I don't know. There's no pattern. I don't know what to do with that. Alex, you can only buy options on certain ETFs until 415, but on stocks, no. They stop at, no, Dan Chapman, no. On stocks, no, they don't. And I wish they would. I wish they would have a pilot program of like, give me 10 of them. I wish they would do 10 or 20 that would continue to trade options. You know, the Microsofts, you know, the usual suspects. All right, Whirlpool. I'm getting whacked here pre-market. Wow, 1920. Wow. Yeah, I'm showing 1671, but still, yeah, that's massive. But Q's, you know, Q's, I got a bullish bias right here on the 15-minute chart if it holds. You know, climactic buy setup near prior support. The daily is still a total mess. So I'm just talking short term here. The snap we were talking about shorting yesterday, that gapping under yesterday's low. We gave this as a bear call credit spread in the weekly letter, and we just didn't get our desired premium. YouTube's asking about Zoom put spread. Yeah, that was on our list yesterday. We said we were going to do it over today's high. So I don't trade in the first 5 minutes. So see that initial buying there in the market where I said, hey, it's green. I think that was just a little short covering. There's nothing to read into that right now. So Zoom is on my list, but I'm doing nothing right now. Nothing. Back to Garmin. Garmin, I saw up huge this pre-market. Look at that. 103 slap back down to 98. Wow, that's a crazy range. UNH. UNH, Nathan. It's a bearish gap, but it's a big gap. I mean, if it doesn't bounce, I think I'd rather go short 30